Greetings, Jedi traders. David here of TradingFibs.com to bring you the state of the indices and market wrap for the first week of September as we head into September 14th. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only. Support your knowledge in the market, see what's going through my head on any given day. Always make sure you have a solid trading plan and always manage your stop when placing a trade. What is going on through my head for any given week now is let's take a look at the TF Russell futures. As we could see, Monday action was pretty limited. A U.S. holiday trading session leaving an open point of control. And TF all to the upside, actually never coming down and closing out the daily gap. So here it was, Monday action, weekly open here at 1150.7. Tuesday extreme trading on Tuesday, Wednesday, and Thursday and Friday. Tuesday, Wednesday, Thursday, and Friday. You can see Friday side by side here, closing slightly above the weekly open here at 1150.7. Let's jump into the YM. YM again here we have price action on Monday, limited session. As we see price action flying up here, closing out some daily gaps on Wednesday, very similar looking to that Monday trading action. Weekly opening price here at 16,367. The only other day on Wednesday tapping it, and we held below that on both Thursday and Friday session. Here you can see we pretty much closed at the high of Friday, just barely getting up to that weekly opening price, closing out Thursday's daily open gap here at 16,196. Taking a look here at the NQ. NQ again, similar picture here. Price action on the NQ, closing so a lot of points of control and daily gaps actually, as we can see here on Tuesday opening up, Wednesday pushing that high just like TF, Russell, and YM, and Thursday again daily open gap here 42.8425 to close that out on Friday. As Friday session we really opened up above that weekly opening price of 42.62. Taking a look at the ES, fourth and final market profile picture, we could see here the weekly open limited session here on Tuesday, U.S. trading hours 1951.50, and again just like all the other three major indices here, price action swinging from a high to a low here, down 1926 all the way up to 1980, and Thursday and Friday just kind of settled down here. We closed out the daily gap on Friday and closed right out here at 1951.50. So what is the purpose again besides the visual market profile is simply two key things here, folks. It's really to see where are the daily open gaps and points of control on market profile. Again, this isn't volume profile, but these are open gaps that the market takes care of itself, finishes, closes unfinished business. If I can tell you from watching the market for a good long time now, the market doesn't move too far before it ends up closing some lines. Whether the ES comes all the way down here to 1873.75 next week, or it takes another 10 months to get down there, the market will eventually, and that is the low of the low lines here. So whether we eventually will head back upside to close up points of controls and daily open gaps, that's not what I could tell you. I could tell you that the ES 1873.75, I could tell you the NQ all the way down here to 39.9750. I can tell you that. For the YM, looking downside, our lowest number that we have plotted here on the chart down here at 15,726. And for the TF, let's take a look at where we're rolling down. TF, I do not believe, oh, there it is, 1096.3 is our lowest number. So yes, at some point I can give you a guarantee. Besides the sun coming up in the morning, taxes and death, I can tell you that the fact that those are guaranteed, but I can also guarantee you that the market will come down here and close out those open gaps at 1096.3 eventually in the future. Let's jump right into the long-term picture as we take a look here at the TF. The TF Russell, we're looking at a 100-tick range chart. As we can see, market action on Friday closing out with the T3 moving averages downside. And here for the bigger picture, 4-hour chart, price action closing out the week, sitting above the 144. You can see here midweek having a challenge of a time here between the 50 and the 144. But again, buys in the market shifts when that 50 breaks above that 144, and we got a little bit of time before that will happen. So no confirmed uptrend, as we can see here on a daily chart. We are still to the downside. Here we see a weekly chart to the downside, T3 moving averages with the 534, and monthly chart just waffling in between these two fib extensions. Taking a look here on the daily chart, we can see price action tried to break that 61.8 midweek and eventually came back down Thursday, Friday, and hanging around the 50% Fibonacci target. YM a little bit more in the green here to the upside. T3 moving averages on a 100-tick range chart. Here we can see YM closing out on Friday right at the 144, but downside on a daily. Again, still the bias on a 4-hour chart to the downside. 38% retracement resistance. As we can see, we have come downside on a weekly, so bias downside. So downside, downside, even though price over here on 144 downside, the shorter term picture back to the upside. Sure, we would love it if all four or all 6 charts were pointing in one direction, so trying to make sense out of the madness that has been ensuing. NQ, here we go, 100-tick range chart. As we can see, up in the greens here, crossing over on Friday. Again, we had a nice push up. If we go back to the market profile in the NQ, again, out of all the major indices, closing, that's right, closing above that weekly opening price, pushing to the high. So again, 100-tick range chart, breaking upside, 5 above 34. We're holding above the 144. We could see that the 50 is migrating towards that 144 cross. The daily, again, same picture. Still that reject up here at that 261.8 Fibonacci target of 45.19. Momentum will play itself out once this turns back around to the upside. From a daily perspective, again, trying to break that 50%. It did stay under the 200 period moving average, broke back downside, and there we go. Not really being able to hold above the 50% until Friday session. Jumping into the ES, here we see T3 moving averages downside, reject here at the 144, 50 below 144, 50 below 144 on a daily, 4-hour chart and a 100-tick chart. Weekly chart to the red, still finding support here at 1915.47 on a monthly chart. And we could see here on the ES, 38%, 50%, 61.8, trying to break that 50%, but the ES unsuccessful to the upside. Taking a look ahead at economic calendar, we could see upcoming for the week, we have the FOMC meeting, which begins on Wednesday. So as we last week, Thursday and Friday, some tough days of trading as contracts were rolling over on platforms. Volume should return into the December contract this week on the 4 major indices. But it's really all about the FOMC this Wednesday, talking about interest rates, seeing if at least a percentage of that interest rate will be implemented, and then Thursday those FOMC minutes coming out at 2 o'clock Eastern Standard Time, and there it is, the infamous quad witching on Friday, September 18th. So again, coming back to our charts, we could see just the overall picture here on the ES, still biased to the downside, and Q with a short-term lift here on a 100-tick range chart and 4-hour chart is the daily migrating back upwards. We'll see, watch that 200 period moving average and watch that 61.8 on all 4 charts as price action just pretty much chopping all over the place, closing out former gaps. And the volatility still ensues in this market. So again, here we see on the YM, the shorter term, if we can break above that 144 and hold, then most likely the intraday picture would be that much stronger to the upside. And then on the Russell here, still a little bit of a movement on the 100-tick would help. If we can get back upside, that would be in line with the 4-hour chart. Would love to see that 4-hour chart go green if it has anything in it. So how do we play that out in the daily charts? Let's take a look at some daily charts from last week. One of the lines that we post is that average move up line. Very interesting how on these 4 indices randomly throughout the week price action will move to this average move up line, sometimes fade, bounce, settle at the end of the day, but having that line there sure is a nice evidence of support and resistance. So what are we looking for? So if the bias, here we have the NASDAQ, and we saw the bias in the action to the NASDAQ pulling upside. Let's go back to the chart again on the NASDAQ. All right, so there's our NASDAQ on a there's our NASDAQ on the weekly profile. Here we can see price action breaking to the upside, breaking above the 144. So how do we lay that into the daily picture or the intraday picture? So we're looking for trades, the strongest of trades, when that buy signal and the X crossover. Again, the better of the setups when B and X come together. All right, B and X come together, and when our 5 is above the 34, all right, that buy signal comes in when the 5 is above the 34. So we have a T3 moving average crossover. We have the 5 above 34, and you can see the bias on the third chart here representing the 50 above the 144 makes for the stronger trade. So here we have set up to the upside, set up to the upside, set up to the upside. Whether you go for 2 ticks, 1 point, whether you able to sustain the trade, that's what we're all about, is looking at these Heikin-Ashi bars, solid bodies, tails up, flex wrinkle bars, keeping you in the trend, and all about management on the way up, all the way up here to the average move up. So in time, if the daily picture, the bias is to the upside, the intraday picture, when you have all three in the green, that's a gold standard setup. Again, it's not the only one setup. You can take the entry when the buy signal and the crossover is in the green, the 5 is above the 34. Even if the 144 is in the red, it doesn't mean we sit out of the trade, but again, a much higher probability that you're going to get a nice run when it matches up with the bigger picture. Let's take a look at a couple other pictures. Here we can see the ES from last week set up on the B and the X here, 1 bar apart from each other. Here's a great example of how, that's right, you had a nice run here. You got the red, the 50 below the 144, not the gold standard setup. The gold standard setup right here as the B and the X T3 moving average is crossed over. The 5 is across the 34. The 50 is above side in the green. All right, price action and trend, and then you draw yourself a nice Fibonacci. That's right, a nice Fibonacci extension, and you have levels and targets. Right here, closing it out on Friday here, as price action ran right up to that 1950.75 and bounce and fade. But re-entry on the B and the X, the buy signal crossover, placing your stop at the most recent swing size, keeps you in the trend, keeps you in the trade all the way up. And to round off and wrap up our last chart here again, keeping it simplified on your charts, Jedi traders, look for the simplest of entries, the buy signal and the T3 moving average crossover, the X representing the 5 above the 34. Here's another re-entry if you had been stopped out on this trade, re-entry again, even a stronger conviction here as we're all in the green, all in the green, all in the green. Whether or not you were stopped out here, you got another opportunity upside. B and the X indicating the trends in play. The Heikin-Ashi bars are upside, and that's right, the color green all in the background to help you out. At least remain in the trend and learning to manage your stop on the way up. That concludes into the state of the indices and what I'm looking ahead for this week. Feel free to stop by at tradingfibs.com or any of my social media outlets to obtain more information. My mantra of one simple strategy, any market, any chart, any time frame will keep you disciplined. You can find me every day on Twitter at TradingFibs, and as always, I really do leave the crystal ball to the experts. I can't tell you what's coming down the line, but I can sure tell you I trust my setups when I see my setups in line, especially with the daily bigger picture, the higher probability with the stop at the most recent swing size. Whether I'm looking for 3 ticks, 10 ticks, 20 ticks, has a higher probability of being a winner. I only trade what's in front of me and on my charts. Have yourselves a great Blue Zone week, and to all of you, a good day, a good night, and good trading.